Hello again, everyone. In this video, we're going to walk through a comprehensive business income problem, and it's going to incorporate many of the specific areas that you've studied thus far. The expected learning outcome here is for students to be able to determine business income for a taxpayer for any given year, including any relevant inclusions and deductions. Before you attempt this problem, you're probably going to want to have reviewed a number of different resources, as it'll be a little bit difficult to jump right into in and of itself. So obviously the related course pack readings for the business income chapter are going to be crucial to your understanding and success on this problem. Check out the business income overview video as well that's on D2L that covers off the major topics that show up here, and it'll give you a grounding for how to lay out and sort of the formatting of the problem. Automobile business expense video, somewhat useful. The home office expense video, very useful, so you might want to check that out as well. If you want a copy of the narrative that is separate from the actual video content here, I have created a PDF which has both a layout of the narrative as well as a comprehensive solution for this thing. So that should be located in D2L right near where the video is. And this is also really similar to your worksheet problem number 5 if you go to the worksheet section of D2L. Problem 5, very, very, very similar, just a couple names have been changed. I do make reference in some of these slides to worksheet problem number 5, so that's what I'm referring to. It's not exactly the same, but it's pretty darn similar, so you can take a look at that if you'd like. So I'm going to walk through example 5 from the chapter 5 worksheet. If you haven't printed it out, you might want to do so, or at least open it up in another window so that you can refer back to it. It's just hard for me to display all the narrative while I actually attempt to answer the problem. I'll briefly walk through the narrative, and then I'm going to address each one of the requireds here. So here we have Doc Brown deciding to start a home-based business that will specialize in selling plutonium via the mail. The business will run out of his principal residence, which just means the primary place that he lives. He sets aside 20% of the total floor space in the residence. This is just for his operations. The capital cost allowance for the entire home would be $8,000. We'll have to prorate that for the portion that he uses for the business. And he wants to maximize that specific deduction. During the year in question, let's see, he's got a bunch of expenses that relate to his principal residence. Some utilities, mortgage interest, house insurance, property tax, repairs and maintenance. We're probably looking at least a calculation of home office expenses here. Most of these things look deductible. The business starts on January the 1st of this year. And we see here that Doc has a separate telephone line installed for dealing specifically with his new plutonium business. All right. As we continue the narrative here, we can see that throughout the year, the plutonium sales totaled 200 grand, and he had some additional costs. So the costs of the goods that he sold were 100 grand. He's got some packaging materials for shipping this in the mail, some mailing costs, office supplies, telephone charges, and prints off some brochures in order to presumably sell this plutonium. There are 3 requireds here, and I'll read through each of these requireds separately in the rest of the video. The first of the requireds here, part A, addresses whether or not Doc Brown can deduct the home office related expenses that he incurs. Now there are specific requirements in order to take these deductions. You can't just automatically take them. So in order to be able to deduct workspace and home or home office expenses, the following conditions have to be met. The workspace has to be either the individual's principal place of business, or the workspace has to be used exclusively for the purpose of earning income from business and is used on a regular and continuous basis for meeting clients and or customers in respect to the business. Now, as far as Doc is concerned here, we can look through the first criteria and address that. The workspace is either the individual's principal place of business. Given that we're not aware of any other place in which Doc Brown conducts his business, we can probably assume that this is his principal place of business. Even if it's not, if we take a look at the second criteria here, note that either one of these needs to be met. Workspace being used exclusively for the purposes of earning income from business. I would say, yeah, that's met, as the narrative does indicate that the 20% of his home is dedicated exclusively to the plutonium business. Whether or not it's used on a regular and continuous basis for meeting clients, That's not necessarily a criteria that has to 100% be filled. Because this is a mail order business, it's unlikely that he'd be meeting with anyone specifically, but we can go ahead and assume that if he were to, he'd be meeting them in this particular place of business with it, which is the 20% of his home. So part B of the required asks us to calculate Doc Brown's minimum net business income or loss that he's going to report on his tax return for this year. Now, why minimum? Minimum because you would like to deduct as much expense as possible, therefore reducing your income, thereby reducing your taxes. So we're going to start this question by first, because there's a number of components, first addressing the home office portion. We've decided that yes, he does qualify to deduct a portion of his home office expenses. So we'll tackle that first, and then we'll come around to the rest of the expenses. So when calculating Doc Brown's home office expenses, we're going to take into account the fact that he had revenues of $200,000 during the year. This is because home office expenses will be limited to that amount of revenue. We know that he has 20% of his home dedicated to the business, so only 20% of any allowable expenses relating to the home are going to be deductible. So we can look through the potential expenses here. Now we've got CCA here, which yeah, we can deduct and we're going to prorate that. We've also got utilities, mortgage interest, house insurance, property tax, and repairs and maintenance. All of these expenses are deductible, but remember, only the business use portion. So let's go and plug these into a framework and see what it looks like. Okay, so I've basically gone through and tallied up the workspace and home expenses. I've included the sales revenue here once again as a reference, just to make sure that I don't go over that. Again, I can't deduct more than the actual amount of the revenue that he earns in the year. So here are the expenses we're going to prorate: the utilities, the repairs, property taxes, house insurance, mortgage interest, and CCA. If we total them all, they're $34,000, and we multiply them by 20%, which is the percentage of the home that he actually uses for the business. This equals $6,800. If we compare $6,800 to $200,000, we can see obviously $200,000 is much greater. Therefore, he can deduct the entire amount of the home office expenses that are relevant, meaning the 20%. So the total $6,800 is his maximum deduction that he's going to take, and he'll take the whole thing. So now we're going to look at the rest of the business expenses and bring it all together to determine what his net business income is going to be for the year. We're going to start by laying out the problem. We'll deduct COGS from sales for the year. So we've got sales here, stated earlier, of 200 grand. We've also got cost of goods sold of 100,000. So I'm going to go ahead and start to fill out my framework for the problem, and then we'll figure out which of these expenses can be deducted for business purposes. All right, so here we have Doc's T2125, his statement of business and professional activities. We've included the sales. We've deducted the cost of goods sold here for a gross profit of $100,000. Now the rest of the expenses that he's incurred look like legitimate business expenses. The only question mark I'd say here is maybe the telephone charges. But up in the narrative, we note that Doc Brown did have a separate telephone line installed for the business. So given that this is exclusively for the business, we can assume that we're taking as a deduction 100% of the charges. Everything else looks okay. Office supplies should be 100%. The brochures relate specifically to the business, mailing costs, and packaging materials. So let's go ahead and fill this in the rest of our problem. All right, so here's the problem showing our gross profit less our legitimate business expenses, materials, costs, etc. We're going to total up all the expenses here, deducting them from the 100,000 to give us some net business income before we take our home office expense deduction. Now we're going to deduct the home office expenses that we calculated previously right here from our 82.9, and we come up with net business income for the current tax year for Doc Brown of $76,100. The final required here asks us to discuss any issues that we should bring up with Doc Brown regarding the workspace and home and business costs. So students tend to struggle with this type of question as they're not always sure what to say. I'd suggest you bring up anything that you know about this particular type of expense and try to frame it in a context that makes sense to Doc. Bring up some specific case facts. Here you'd probably want to bring up that even though it's not particularly relevant this year, in the future, he may be able to carry forward some of his home office expenses. You want to tell him that he can't create a loss with these home office expenses, but if in future years he does, he'll be able to take those losses, carry them forward, and offset income from those particular years. It's probably worth mentioning to Doc that handling plutonium is extremely dangerous and could result in grievous injury, sterilization, or possibly death. Okay, that's the end of this video. Check out some more of the Chapter 8 problems if you want some more practice with this type of comprehensive problem. You can also check out those Chapter 8 or business income worksheets. Those should have a lot of really great problems for you as well. Good luck.